Today, we are going to talk about how Asian countries are beginning to cooperate closely. We have the latest news from the Asian +3 conference, which covers not only the countries of Southeast Asia, but also 3 more countries: Japan, China, and South Korea. We will also discuss the gold and silver market. It seems that the correction for gold is complete, although the market is still volatile. And then we will also affect the US Treasury bond market, because it is related to what China, Japan, and other Asian countries are doing. But Japan and South Korea are formally allies of the United States, but even they are beginning to move towards independence. And events accelerated with the start of the trade war. Let's take a closer look at what is happening in Asia. I found the information from a French blogger on Twitter. He has 300,000 subscribers and lives in China, even married to a Chinese woman. Interestingly, he founded the Chaos Trip Company, which he then sold to another trip advisor company. Here's what he wrote: China, Japan, South Korea, and the Asian countries have published a joint statement. They are united in opposing the growing trade protectionism and are building a new trade and financial infrastructure to weaken dependence on the United States. They also presented a joint strategy to strengthen trade between the signatory countries, as well as to develop bond markets in local currencies and reduce dependence on Western financial institutions, for example, through the expansion of the Chiang Mai Sim Multilateral Initiative. If anything, CMM is a mutual emergency financial assistance fund in case of a crisis. The IMF, or the United States, does not participate in it, but 10 Asian countries, China, Japan, and South Korea participate. Now all these Asians +3 countries want to expand this fund in order to further reduce dependence on the West. It is especially important that all of these countries have supported the world's largest trade agreement, the Regional Comprehensive Economic Partnership. All these countries participate in it, but the United States is not included there. And in the end, we see how Trump achieves the simply unthinkable, something that could not even have been thought of before. It unites East and Southeast Asia into an economic bloc that seeks to reduce the risks associated with America and American assets, including bonds. Note that it talks about bond markets in local currencies. This is very important to emphasize. Asia is actively developing its bond markets in local currencies, strengthening financial cooperation between countries, and even creating gold vaults outside the dollar system. This is the foundation for an alternative. Time will tell whether it will be successful. This is due to the fact that these countries are reducing their dollar reserves and are no longer actively buying US bonds as before. They are looking for other alternatives. For example, gold. This is where they want to keep their foreign exchange reserves. Pay attention to the huge source of demand for gold created by central banks in recent years. It's just a vertical explosion. And it all started with 2022 year. The People's Bank of China is now considering opening depositories for gold in other parts of Asia to make the yuan a kind of gold convertible currency. Of course, so far, they are not talking about a new gold standard, but it's all part of the new monetary infrastructure. That is, the architecture that they are trying to build. It hasn't been built yet. And now, I want to show you this article by David Jensen about gold and the depository, in which he published on the 6th of May, 2025 year. David believes that events are developing very quickly, and Trump's tariff war has only accelerated them. The article says that China is rapidly moving to global settlements in yuan linked to gold, creating a new international infrastructure for the supply of gold. In other words, he is also starting to build storage facilities and logistics abroad for real gold supplies. This is not just an article, friends, this is a huge signal, especially when you consider that analysts used to say that the yuan cannot become a serious reserve currency because it is not international, because it is not freely convertible. But as you can see, China has decided to prove the opposite. He is starting to build a gold-linked infrastructure to make the yuan more convertible. If this succeeds, in fact, the only obstacle on this path will remain restrictions on the movement of capital in China. And, most likely, China will do something about it in the future. And here's another article from the Financial Show Times, which is called How China is Quietly Diversifying from US Bonds. I found an interesting paragraph in this article. China has issued a joint statement from the People's Bank of China, the National Financial Regulation Authority, the State Administration of Currency Control, and the People's Government of Shanghai. In this statement, there was the following phrase: "We will explore the possibilities of internationalization of physical delivery for individual goods that are traded on the Shanghai Gold Exchange through the creation of foreign storage facilities and delivery centers." By individual goods, of course, they mean gold, silver, and other metals, certainly not paper dollars. The South China Morning Post writes, China will allow the supply of some goods traded on the Shanghai Gold Exchange abroad by creating storage facilities in other countries. This is part of a broader strategy to promote the yuan and reduce dependence on the US dollar and the American financial system. This is what the statement says from the leading regulatory authorities, the Central Bank of China, the State Administration of Currency Control, and the National Financial Regulation Authority of Shanghai. So these are really very important events that excite my consciousness. Frankly speaking, I am shocked that I live in such an epoch-making time. But let's move on to gold and silver. Some analysts believe that gold has peaked and we are expecting a big drop. And yes, the growth rate of gold is now such that the correction will occur quickly and sharply. They will be difficult to predict unless you work in a hedge fund and are an experienced speculator. I would say the best thing to do is to keep averaging real gold. Real, not paper. Continue to average Bitcoin, also real physically, at large 20-30% drawdowns. The same goes for silver. Yesterday, stock markets looked weak before the opening of trading, but then recovered a little. Perhaps they will be able to hold on even today, but it seems that this rally, which we have observed, is starting to lose momentum, and is now more dictated by expectations before the US Federal Reserve meeting today, on Wednesday. However, the markets do not expect a rate cut, so if the Fed leaves them as they are, then nothing special will happen in the markets. But if the Fed suddenly reduces them, it will be a bullish signal for the markets. Or if they say they will finish quantitative tightening by June or by July. Therefore, this also needs to be monitored. The currency market is quite stable today, nothing particularly interesting, but there is one nuance that I would like to draw attention to. This is the US bond market. Yesterday, I noticed that the yield on long-term 10- and 30-year bonds began to rise. This is a wake-up call for the US government, because in the coming months, they will need to reborrow trillions of dollars to pay off old debts. And the higher the yield, the more expensive it is to service this debt. For example, the yield on 10-year-olds has already risen to as much as 0.37%, and on 30-year-olds yesterday, it almost reached 5%. The US Treasury Secretary, of course, is watching this, and he clearly understands that this is a rather dangerous business. We will continue to monitor the bond market, but I think that the 40-year bull market of bonds, which lasted from 1981 to about 2020, is over. Yes, there may be short-term rallies in the bond market in the future, but they should be used as a selling opportunity. It will be the other way around. If earlier yields went down for 40 years, now they will go up for a long time. And that's bad for Trump, and that's why I think central banks will start interfering. They will have to intervene. They will have to launch some operations like quantitative easing or controlling the yield curve. And now I see that the US Federal Reserve is already trying to use other tools without resorting to quantitative easing. For example, the Fed has just made the largest purchase of 3-year bonds since 2021, pouring $20 billion in one day. This is already liquidity to the bond market. That is, to some extent, it is even possible to recognize this as a certain step of QE. They cannot allow the bond market to be completely free with real pricing, because this will destroy the entire financial system. But on the other hand, there is an inflationary threat that has grown after the tariffs. For example, Bloomberg presented an excellent visualization of how expensive the tariffs from Trump are. Orange is the cost of goods before tariffs, and yellow shows the additional cost of goods due to tariffs. And as you can see, this is quite serious. But, as I have said before, such actions of central banks, additional mission and manipulation, will weaken the dollar. and all fiat currencies over a long distance. And if money becomes cheaper, then everything becomes more expensive in relation to money, including gold and Bitcoin. And it seems to me that the Chinese are really determined to push through a new international yuan. And they don't really care how strong the yuan is against other fiat currencies right now. Why? Because I think they know that they actually have a lot more gold than they officially claim. They claim 2,200 tons, but I think they have about 30,000 tons. And at some point, it won't matter how weak the yuan is on paper. As soon as they announce how much gold they really have, the yuan will stabilize sharply. But I think they are waiting for the right moment, and the right moment may come after they get rid of most of their US bonds. Or when they build this new infrastructure for gold, or when they create a kind of gold standard, or when some other condition is met. But there is no need to think that everything is going smoothly with China. The tariff war affects them very much. But I will make a separate video about this. That's it. See you in the new videos. Take care of yourself. See you soon.